Rage quitting is jumping across the country. Just a few years ago, the market was absolutely on fire, and now sellers are begging for buyers to show up. And when they can't sell their house, they yank their house off of the market. They blame their realtor and say, you can't sell it for the price I want. It's your fault. And they rage quit. They take it off the market and then become an accidental landlord. So let's dig into the information. This is really interesting. Sellers are giving up. They're taking their house off the market. Delistings for homes for sale near the highest level on record. In April, 5.8% of people delisted their home. They pulled their house off of the market. Now, when this stacks every single month, 5.8% might not seem like a lot to you, but when this stacks every single month for months on end, the problem becomes that these turn into accidental landlords. What I mean by that is they get turned into rental properties, where now we're having a glutted supply of rental properties come on the market, which is driving rents down. So it's not that there's less sellers than last year. They've just transitioned into being landlords that they didn't want to be. And landlords are taking their house off the market for the same reason that the buyers can't buy the house that they want. The numbers don't make sense. The seller has to sell their house. Maybe they got a low interest rate. They need to sell that house and then move to another house, but now they're getting a higher interest rate, often in the 6s and 7s, and giving up the 3% rate. So this is why we're starting to see basically the turnover ratio go very, very low. This is the number of homes that have sold, and it's at the lowest rate in decades, right? So homes sales per 1,000 homes in the first 9 months of the year. We're just grinding along the bottom here because people can't get the price they want. They can't move to the next house that they want because the economics of buying a new house in today's market, for most cases, don't make sense anymore, especially when you compare to renting. And I'll show you the data later that explains how this is going to work. So I'd love to hear from you. Drop a comment and a like below. Are you seeing this in your market? Are you seeing sellers getting frustrated, giving it up, turning it into a rental property, or even just staying put? Because we're seeing it happen all the time here in Florida. Now, even Dave Ramsey's coming out and saying that 75% of the U.S. homes are now unaffordable, the most unrealistic real estate market in 100 years. So this is no longer a secret, okay? There's large influencers, large folks out there who are losing tons of money because the numbers no longer make sense, which should have been obvious to a lot of people. When you have zero interest rate policy for 5 years, what do you expect? You're going to have inflated assets, and when those interest rates go up, those asset prices will come down. Well, it doesn't hit every single area the same at the same time, but over time, it's going to put basically financial gravity on the real estate market and start moving things in a really ugly direction, which we're seeing here in the Sun Belt. Obviously, Florida, Texas, Colorado, Arizona. I will show you the map later in this video of where the pain is showing up first, but it will spread over time. And the reason this is, again, because we had mass speculation, we had migration patterns that changed, and it just pushed prices to record highs. You can see that we're near record highs. U.S. home costs more than the 2006 bubble peak, even after the massive inflation that we've experienced. So we are near record highs right now. It's likely that we're going to have some mean reversion and prices will come back down. We really expect this to come over the next few years. My models internally show that we're going to see between a 32% to a 41% decline over the next few years, okay? This does not happen overnight. The real estate market is liquid, so it takes time for this to play out. But the prices that we have today are just absolutely insane. And here's the truth. Americans didn't stop working harder. Income went up 10x, but the problem is the cost of homes, the cost of shelter went up 17x. College, 16x. Healthcare, 42x over the last few decades. And this is what the actual problem is. Wages just didn't keep up with the cost of living, and that is why more Americans are feeling stressed more than ever before. 78% of Americans are living paycheck to paycheck now. The stats that come out on the American consumer and how their consumer confidence index gets worse every single month, and this is why. And the inflation just keeps getting worse, obviously, with the oil shock that we're experiencing right now. And what does the government want to do? They want to keep rates low, which means we're going to just experience more and more inflation, and the government doesn't seem to really care. So this is what we're experiencing now, is a consumer crisis, an affordability crisis. This is the percent balance of 90 days plus delinquent by loan type for credit cards. Credit card rates of default are going up. Same thing for car loans, same thing for student loans. Across the board, the consumer is completely maxed out. And obviously, when they're maxed out on these other loan types, it becomes much more difficult for them to be able to purchase a home. That slows down these ratios moving forward. And this is something that you're going to want to watch the consumer very, very closely, because even though the top 10% is doing 50% of the consumption now in this country, there's only a certain number of them that need homes, right? It's just the top 10%. You need a strong middle class with jobs that can afford property in order to have a strong real estate market. And this is where the big disconnect is in today's market. So here's the increasing housing gap income, right? Back in 1985, it was 3.5 times your median income that you would need to be able to purchase a house. Now you need 5.8. In some areas, it's all the way up to 7. And Zillow keeps revising its numbers down for what's going to happen next because of this affordability crisis. So we're going to show you that the projections of what's going to happen next in the market continue to get revised down. The number of closed sales, the number of price improvements, all of that continues to move down as the affordability crisis continues. And this just shows another article that says America is maxed out. Credit card delinquencies just hit a 15-year high, and it's about to get worse. A toxic convergence of war-driven inflation, collapsed savings. The savings rate's going down while wages are staying below the inflation rate. So that's how you know that the middle class is getting poorer. And Americans, pushing millions of Americans past the financial edge. The data says it may get worse before it gets better. It's way worse out there, guys. When you look at the credit quality of the consumer right now, we are scraping the bottom of the barrel. People who already they already bought in 2020 to 2022. The rest of the people who are buying now are often, dual income families. They already have wealth. They're already top earners, or they're getting an inheritance or money from their parents to help with the down payment, or some semblance of those. But the average American consumer, they are getting completely locked out. Now, obviously, the American consumer has options, and this is the biggest thing that people will have to fight when they're selling their house, is that it's way less to rent than to buy in today's market. Buying a home at this point in the market cycle is often up to 50% more expensive than renting a similar home. This is crazy, right? So you could rent a house for maybe like $1,700, or you could buy that same house for a $3,000 payment, and that doesn't even include all of the repairs and everything that needs to go in to fix it. This is something that you really need to be thinking about as a consumer. And if you're planning on buying a house, you need to be there for a really long time for the economics to make sense. I've actually put a calculator on my movewithmomentum.com website that you can check out, /rent or buy. And it's just a great tool. I will put it down in the comments if you want to see. Just slot in your rent amount and it'll spit out what you can buy based on that rent amount. I think you'll be surprised at the outcome. Put a comment below if you did that and let me know the number that you get. But here's what's happening now, right? Because we're in an affordability crisis. All this demand, all of this stuff that happened from 2020 to 2022, it came to the Sun Belt. Now the Sun Belt, those people who bought from 2022 to 2024, now that the correction's in process, they're now underwater. So now we're experiencing a fire sale map, because what happened is people relocated here, they worked from home, then they got called back to office, they lost their job, etc. Something happened in their life event that caused them to have to move, and now they have a fire sale inventory. And so you can see this red will absolutely spread over time. People are basically selling their house for less than what they bought it for, and the transaction costs are about 10% to buy and sell when you use a realtor. Even if you don't use a realtor, you usually get a worse deal. So look, you got to be really careful on this stuff. If you're buying near new construction specifically, we're seeing a lot of pain. If you're buying phase 3, phase 4, phase 5, and there's more phases down the line, you need to be really careful. That's why the builders are giving you massive incentives to buy houses right now, because literally it's just so unaffordable. They would rather give you a lower interest rate and pay $50,000 for your lower interest rate than give you $50,000 off the price, because they can buy the interest rate buy downs in bulk, which is a lot cheaper than reducing the price. And obviously you can see Florida's fire sale map here as well. You can see this area: Jacksonville, Orlando, Tampa, Fort Myers. You can see where the pain is. Obviously Miami's starting to experience some of it, but you can see these massive growth markets are the ones that are really starting to feel the pain. But your question is, with these prices being so high and interest rates where they are at, who is going to buy these properties? Okay, so this is the question you have to ask yourself. Who is the next wave of buyers who can actually afford to buy at today's prices and interest rates? And that's why Zillow keeps revising its numbers down, right? The numbers don't make sense. So here's where we saw all the speculation in the Sun Belt. And then the areas in the Northeast are the areas where they didn't build. They had not in my backyard. They had aggressive regulation. But the Northeast, even though it's doing well right now, they did not have that inflation boom during the crisis, right? I actually experienced the opposite. They had mass migration out of those areas, and they saw stagnant markets for a couple of years. Meanwhile, we had massive appreciation in the Sun Belt, up over 40% in a lot of areas. So what we're seeing is an adjustment that's happening in the Northeast, and then we're seeing an adjustment in the South based on these migration patterns. And now people are stopped moving to the South, and they're actually moving out to the Midwest and areas like that, because it's just become so affordable in these areas, and the jobs just don't support the shelter costs. So we're going to likely see this trend continue, where there's just two different economies for housing moving forward. But of course, every area is hyper local. But I can tell you, even in the Northeast, they're experiencing their own problem. They have really aged housing stock. They have young people who are moving out to the Midwest and the South are getting out of there because it's too expensive to live. And so I think this is going to be a trend that's going to have issues. And obviously the demographic trends in the Northeast are pretty bad too. You have a lot of people who are elderly who will sadly be passing away in the next 20 years. And who's going to be able to purchase those houses at the prices and interest rates at that point in time? And it's the question that you need to ask yourself. And here's another way to look at it, right? 1 year change in home prices for America's 50 largest metros. Obviously, you see the Austin, Texas, Florida, Colorado, areas where there was mass speculation, California, Tennessee, are now coming down, and the areas that didn't have mass speculation are the ones that are holding up. And so that's where we're seeing the difference. And also the builders that obviously overbuilt in these areas, trying to capture that demand that came from the 2020 to 2022 time period. But I think the red will spread. That's my guess is what's going to happen, because the affordability crisis is still going to impact a lot of these areas in a big way. Obviously, if interest rates continue moving up, this growth of their housing price appreciation will continue to slow. And here's what we're seeing right now on the ground. The new construction stock continues to skyrocket, right? So we have this narrative that there's this massive housing shortage, and the reality couldn't be further from the truth. We have tons of homes available for sale, actually more than the great financial crisis when you're looking at new construction. This is the houses that are for sale by stage of construction, not started, okay? So there is a big backlog of properties that can be built and are built that are just sitting there waiting for the demand to show up. And so the builders are really feeling it right now in every single way. And again, this is only specific markets where the builders were allowed to build and built in a big way to try to capture that demand. But we're still being pitched that we have a housing shortage. Well, in the Northeast, that may be true in some specific areas. There's not really a shortage of houses available. It's actually a mismatch of houses, right? So we just don't have houses that are affordable that the next generation can actually purchase. And builders are pulling back, right? Multifamily housing starts are starting to decline, right? Migrations boom slows, and now it's starting to decline. And so the builders are pulling back on their multifamily housing starts. I can tell you in my area in Jacksonville, we are completely overbuilt for what we are seeing in the marketplace. And they continue to build this multifamily because once they start the project, they have to finish it. They already got the bank financing. They already got the contractors out there. And this puts us in a really unique situation where we're seeing rents fall, we're seeing prices fall, but the consumer can just continue to rent because the rents are falling faster than the prices are falling. And so there's a massive disconnect between what you can rent a house for and what you can buy a house for. And that's going to be a major story over the next couple of years. In the long term, we talk about the silver tsunami. The long-term population growth and contributing factors is not looking good. You can see that the projections moving forward show that population growth could actually go negative over the next long term, right? So we have net immigration, which is we're expecting a lot of immigration, and then births minus deaths. Like, people are just not having kids, okay, because it's so expensive. So this is another issue that we're seeing across the board that'll play out over the next 20 years. So if you're thinking like a real estate investor, where is the extra demand going to come from? That's a question that you have to constantly ask yourself. And right now in the Sun Belt areas, we are seeing home foreclosures jump. This is no surprise because the government put on hold basically foreclosures for 5 years with their workout programs for FHA, VA. This stuff is returning. You're already seeing the FHA loans have delinquency rates of 13%. They go up every single month practically. And so we're not surprised to see this home foreclosures jump. Now, this percentage rise in Q1 obviously is a larger percentage because we're coming off of the bottom with very few home foreclosures, but this trend is reversing directions, and I expect we'll see a continuing amount of home foreclosures moving forward from here as the consumer becomes more stressed and housing prices come down, and especially those people who bought at peak prices in 2022 to 2024 are going to be the ones that have to move and sell, are going to be the ones that are going to have the biggest issue. And I think if we see some sort of job market crack, you could see these numbers go a lot further. And of course, one of my favorite charts, and I'll leave you with this, is that mortgage rates falling for the last 40 years is the reason why prices have gone up. It's actually 80%, up to 80% of the reason why prices have gone straight up, okay? So when the market has, interest rates go the other way, every 1% increase in the mortgage interest rate impacts affordability by 10%. So that's the purchasing power by 10%. This is why we're going to start seeing a continual slowdown, especially going into the end of the year. If mortgage rates stay high, we're already in an affordability crisis. If mortgage rates continue to move up or stay where they're at, you're going to see more price decreases. You're going to see more houses come to the market, more buyers sit on the sidelines and start renting. And I think this is what we're going to see happen through the rest of the year, because what happens when the interest rates start moving back up? That is the question you need to ask, right? We've had 40 years of declines. That's why we've seen 40 years of just straight appreciation outside of the bubble here. And what happens when mortgage rates start moving up? So look, I'd love to hear from you. Will prices change in your area? I'd love to hear where you're coming from. Drop a comment below. What are you seeing on the ground in your marketplace? I look forward to connecting with you, and I have a huge project coming on behind the scenes that I can't wait to share with you guys moving forward. Some amazing website tools that you're going to be able to use to analyze your market area. If you have any questions, reach out to me. If you need a top real estate agent in your market, reach out to me. I'm more than happy to be a resource and get you in touch with somebody who actually knows what's going on in your market. 80% of agents don't know anything about real estate. They just have their license. They're not going to have the skill set to be able to help you. You got to get in touch with that top 20%. So just be aware, interview well, reach out if you need help. I'll drop my email and all my contact information below. I respond to every single email. Thanks again for watching, and I will see you next week, because this Friday I'm going out of town to go to the World Cup. So I will be back next week. Thanks so much, and I'll see you next week.